Hello again, everyone. This is Maurice White, and I'm coming to you again with our next installment in our series of informational tax talks surrounded around the Tax Cut and Jobs Act, which was passed in December of 2017. And today we're going to talk, our topics are centered around the alimony deduction, the head of household filing status, and then I'm just going to talk a little bit about, in conjunction with that, the married filing separate filing status. Under the new law, as far as alimony is concerned, and the reason I want to talk about that is, unfortunately, in our society today, we have a significant number of divorces. So, just so we'll be aware of some of the ramifications of such. And under the new law, alimony has been changed. Okay? And now, please hear me clearly. This will affect divorces in which there's legal alimony that's being paid, but this will only affect divorces subsequent to December 31st, 2018. So this law will not be applicable until 2019 and beyond for the next 8 years. So basically what you have now, if you're currently divorced and you're paying alimony, okay, and you're receiving alimony, the payer of course gets deducted, and the recipient has to report it in income. Under the new law, if you get divorced subsequent to December 31st, 2018, the alimony payments will no longer be deductible, and the recipient does not have to include that in income. And alimony, make sure that if indeed you do find yourself in that situation, unfortunately, make sure you do understand the definitions of alimony, because if the payments do not cease upon, say, the recipient's death, and they do not cease, then the courts have been found to look at that as not being alimony. So that is the IRS's interpretation. So be mindful of that. Alimony is basically separate maintenance payment. It has nothing to do with child support. It was a totally separate thing. Okay? So under new law, okay, for 2019 and beyond, alimony payments will no longer be deductible, and therefore the recipient does not have to include it in income. However, if you're currently in a divorce situation, you're currently divorced and you're paying or separated, and you're paying separate maintenance payments, you can have that current decree or a maintenance agreement modified, say in 2019. And if you do that, the parties can agree to have the new law to apply to that old divorce, but it would have to be actually modified in writing. And if the parties agree, then you can get the new treatment for the alimony payments. Okay, so that's the alimony. Next, we want to talk a little bit about head of household filing status, and this is primarily because there's some new requirements that's imposed upon us tax professionals as far as preparing tax returns. Under the old law, if there was the return preparers are required to do what they call due diligence, and there's a long form that we're required to fill out, Form 8867, that if you've received a child tax credit or earned income credit or American Opportunity Credit for college, there's a due diligence requirements. There's a number of questions that we have to ask. Under the new law, okay, we have to also, head of household filing status has to be figured properly. We already should have been doing that, but now there's a penalty that would be imposed upon the tax professional if we don't get the head of household filing status correct. So you may find that your return preparer, your tax professional, is asking you even more questions than in the past, because again, we're facing a $500 penalty if we get your filing status incorrect. So be mindful of that. Be patient with your tax professionals as they make sure that we get that filing status correct. And speaking of filing status, the last thing we want to talk about today in this informational tax talk is around the married filing separate filing status. If you are married, okay, and you do not have a qualifying dependent, you're separated from your spouse, then you're married filing separate. You cannot file single, you cannot file head of household. In order to file head of household, you must have a qualifying dependent. What that means is you're actually taking care of someone, you're supporting a person, and you've maintained a household for you and that particular person for you provided more than half of the support for that household for more than half of the year in order to get that filing status. So, okay, so really be mindful of that. But again, the takeaways for today: alimony has been changed, and the head of household filing status is now part of the due diligence requirements for return preparers. And again, remember the filing status for married filing separate. Also, just briefly, I'll say, if one spouse itemizes their deductions and you're married but filing a separate return, the other must do the same thing. If they itemize, you're going to have to itemize as well. So be mindful of that. And again, I know it's a lot of material in a short period of time, but the Tax Cut and Jobs Act is a voluminous new tax law that we're all learning as we go along. So hopefully this informational tax talk has been some help to you. And if you need additional information, of course, as always, you can reach out to Maurice White CPA at Maurice_W@msn.com, or of course seek advice from your tax professional or some tax professional in your area. Okay, so again, stay tuned. We look forward to continuing to speak with you as we go through this Tax Cut and Jobs Act new law. Take care.